Good morning. What's happening? It's been a couple of days since my last stream, but I'm back. I'm here. Things still haven't really taken off yet. We're still waiting at the gates. Let me switch to this screen here. Hide the kangaroo. And let me just share this stream and then I'll get started, so bear with me just a moment. Okay. Twitter knows and Discord knows. Get right into it in just a moment. Gotta update the title. It looks like it's using the old title. Should be the big week ahead for Bitcoin stream. Anyway, doesn't matter. I'll just close all that down. Alright, so Bitcoin has had a pretty big weekend so far. It's managed to maintain this level here. You can see it's currently fighting with the 200 EMA on the daily chart. Let me just make that color a bit brighter. Actually, no, that's okay. That's okay. As long as we can see it. Why don't we make it this color? Make it a bit bigger too. Alright, so the pink one is the EMA. The yellow one is the simple moving average, the SMA, or just MA. Now, if we go, you can see pretty much we've smashed that 200 SMA. I'm going to hide the EMA for a minute just so we can focus on the SMA. And I know I've said this before in other streams, but we haven't really had any activity at the 200 SMA since all the way back here, which was a rejection in March last year. So it's been almost 12 months since we've even, been back to it. Now we broke back below it. It's been over a year since we've been on top of the 200 simple moving average. So that's pretty damn significant if you ask me. Pretty damn significant. Now, as you can see, let's just go back through and look at the past cycles for Bitcoin and see what kind of thing happens when you prop back up over the 200 MA for the first time in a long time. So the last time Bitcoin was above in this area was over here. It dropped below, got rejected here, rejected here, rejected here, and finally it breaks and gains support up higher, and then the real rally starts like this. So this was technically a bear market rally. It came nowhere near all-time high, but it made a pretty nice recovery of price. It was enough of a rally to get some activity happening in the market again, but it wasn't sustained. It wasn't able to rally up all the way up to the all-time high, right? So that's fine. This is where COVID happened. Pandemic hit. The whole world got shook by that, and unfortunately, and off the back of that, we had the halvening event, which I think happened in May of 2020, something like that. Somewhere in this vicinity was the halvening. So post-halvening, it kicked off the bull run, just like a lot of other times in Bitcoin's history. The halving event kicks off a bull run. So once again, once getting up on top of that 200 simple moving average, price tends to rally into a bull trend. So anything above the 200 is regarded as a bull trend. Anything below the 200 is regarded as a bear trend. So we've been in a bear trend since December 2021. So more than a year ago, we've been bearish. So now I wanted to grab a fractal that I thought was interesting. I might have to go onto the logarithmic view to grab it though, because this here, to me, this sort of like inverse Bart Simpson popping up over the 200 looks very similar to here, inverted Bart Simpson popping up over the 200 for the first time after a bear market. So if I grab a fractal of that, this is what I'm looking at. So let's assume, wait, I'm gonna have to zoom in for this. Okay, this is the daily. Let's go weekly, see if it looks similar. Okay, that's cool. Yep, I can work with the weekly chart. Okay, so if we're taking the same candle that propped us up on top of the 200 EMA back here from the inverse Bart Simpson and trace it like this, we now have like a copy of what happened to bring across here and see what might happen. Now this isn't a perfect science or anything, it's just showing how things can happen, how Bitcoin can behave, popping up for the first time over the moving average for that after the bear market, right? So if anything like that happens, what does that mean for Bitcoin's price? Like if we do get up here, like to this area, check it out. It's like almost $50,000 to this area. It'd be basically testing this pivot here, this resistance, if this fractal was to play out the same as it did back here, right? So that's kind of bullish, it's kind of exciting, but obviously there's a long way to go and things don't repeat perfectly to the past. They may echo, so they may be similar. Now, they may be similar to a better degree or a worse, like a less degree, but for the most part, I think this is significant. Breaking up over that 200 simple moving average, I think there's further upside potential there. Now, if I go back to a linear chart first, and then we'll go to like say the daily, and just zoom in on, okay, here was our June low from last year, 17,600 odd. Now this was our high of that rally that came off the back of that June low. So this is the high point that I got stuck at. Now we know that the lowest point since that high is down here at 15,473. I'm just going to say 15,500. I'm going to call this high, which was 25,200. Yeah, we can go 25,200. All right, so if we grab a fib retracement from that high and draw it all the way down to our lowest point of this bear market so far, because, you know, they could be lower, but we don't know that. I'll lock that fib retracement in, and lo and behold, if I just hide the MA as well, just so we can focus, we've had not only a retest of this high, but a very clean, almost dollar accurate test of this 0.618 Fibonacci level. So it's a very critical price level that Bitcoin's at right now. So next week's price action in the stock market, I think, will sort of give us an indication of where things are going to head moving forward, like for the next week. And then, you know, we have the funds rate decision coming up as well. Let me just find what date that will be. Okay, let's change to US time zone, because I think the majority of my audience is from the US. Okay, we're going Eastern Standard Time. Go to the calendar. So that's this week, 15th till the 21st. Let's go this week here. So 2 weeks away is the federal funds rate decision. So currently the funds rate is at 4.5%. And we're seeing if they're going to give us a 50 basis point increase, which would be take us to 5% for the interest rate, or we're going to see if they pause or do just a 0.25%, a 25 basis point increase, which should take it to 4.75% interest rate. So with a pause, it just means they make no change to the current rate. That's not a pivot. It's just a slowing down of the interest rate hikes that have been going on. So, you know, they admit, and everyone knows, that they were very aggressive with the hikes in 2022. Now, a recent statement by Jerome Powell said, he mentioned that 2023 is still gonna be, you know, tough monetary policy, but it's going to be a different speed. So they're not going to be increasing at the same rate. It's going to be a bit more spread out over the year until they hit their target of 2%. So that's optimistic. I think if this next funds rate decision, which comes out on the 1st of February, now that is a Wednesday, Feb 1, let's see, at 2 p.m., so 2 o'clock in the afternoon on Wednesday. So where are we now? Tomorrow is Wednesday, so it's Wednesday week, because it's not the next Wednesday, it's the week after that, which is when we get the funds rate. So there's a little bit of action to be had in the markets before we get that funds rate decision. Now, the whole point of the interest rate and the inflation rate is that has driven markets since, you know, like, it had a huge impact on what markets were doing, especially last year, right? In 2022, when inflation was getting out of control. Let's go find an inflation chart real quick. I'll tie this back to Bitcoin in a second. But let me just go to the inflation chart, and we'll turn off the moving average, turn off logarithmic, go full screen. Let's make this line blue. Okay. All right. So these vertical columns represent the decades. So you can see the 50s was very volatile with inflation. The 60s started off great, like the first 5 years of the 60s, and then it started to creep up. The 70s was very painful as far as inflation goes. It was, yeah, a nightmare. And then, you know, the early 80s, we were still dealing with out of control inflation. There was actually a depression in the US caused by this out of control inflation, and they had to tighten so hard that it caused a depression, like a really bad recession in the US. But it certainly worked at bringing inflation down at the pain of, like, destroying the economy short term. So that's why they've been so hawkish last year, is because they don't want a repeat of this 1970s inflation where it got out of control twice. So, they started getting a handle on it, but then I think they backed off too early and it spiked up again before they got to the 2% target, which is this yellow line down here. So we've been very lucky in the last, I would say, 30 years. It's been relatively calm. Like, yes, there's volatility along the way, but even from, like, say, the mid 80s onward, this has all been very calm conditions. We haven't been this high since, that depression that happened in the US in the 80s, the early 80s. So 9.1% is the current peak of inflation, which happened in June of last year. And ever since then, if we zoom in on it, we've been recording lower and lower CPI data. So the last data that came in for CPI was 6.5%, which was bang on the forecast, right? The forecast was for 6.5, we got 6.5. So really good news, really bullish, and I think that's a big reason why markets rallied. There's a few other reasons too. Now, the website that I've brought up in many streams before was this trueflation.com website. Now, their current reading, if we go to it, is 5.6%. The lowest reading so far this year has been 5.5%. So this is year to date. So that's since the 1st of January. They need to update this. This should be now 6.5, this US government reported rate by the BLS, the Bureau of Labor Statistics. So I think, yeah, they've updated it on this graph, but they haven't quite updated it yet on this figure here on the site. Anyway, you can see Trueflation has started to get a bit more in sync with what the government's been reporting, what the BLS has been reporting for the inflation figure. I think they pretty much nailed it. If I just scroll in here, you can see, like, down in there where the blue lines touch, I think they were pretty much both suggesting a 6.5% at that point in time. Now, 2 months later, which is right today, which is, what we're looking at right now, we're pulling in a 5.6. Now, if we go back to this chart, a 5.6 for, let's see, what day is it today? The 17th of January. So we're kind of like midway between, midway in January. So we're at the midway point. There's January, there's February's here. So on the line, we're roughly like somewhere here. And we're pulling in a 5.6%. So that's about here. So this line should be actually more like about there. 5.6. Just make sure that says 5.6. Okay. So it's come down even from the last time I had this updated as far as Trueflation is concerned. And you can see if the BLS report for interest rates, which is the government report, if that comes in anywhere close to Trueflation, it means we're still on this same trajectory to target 2%. Now that target, if we stay the course, which I know that it won't happen perfectly like this. There'll be different rates like reported, or different inflation rates reported along the way. But yeah, with this kind of average trajectory down, we should hit the 2% target in July. Now remember, the target doesn't get reported by the government until 1 month later, so we might not hear about the target being hit until August. But that will be extremely bullish. That'll be a big deal if we can manage to get down here. So we're doing well. I don't think it's the time for the Fed to back off. They should remain hawkish. We're only about a third of the way to our target from the high. So, but hey, we're doing well. I think this optimism in the market, as we've seen it so far, has been due to this recoil, like this pullback on this out of control inflation, and the DXY reflects that as well, right? The dollar index. You can see it's been pulling back too, in line with the fact that inflation's coming down. So when did we peak on inflation? I just want to see that. It was June last year. So 2022, where's June? June's all the way back here. Okay, so June's like roughly here. That's when inflation was peaked. But even with inflation coming back down, the dollar index was out of control. Now the reason for that is not because of, not necessarily solely because of the performance of the US dollar, but the other currencies that the DXY, or the dollar, is measured against in this index. So you have the pound, the euro, the yen. They are all like, I don't know how to draw the pound, something like that. They have been, doing it tough. And then there's the euro. They've been doing it tough all of 2022, especially Europe, right? Because of going into winter with the energy crisis and the Ukraine war, the Russia-Ukraine crisis. So that, Europe's had it tough with the euro. Britain's had it tough. Well, they had it tough because they had a change in government. Someone came in for a month, I think, and then they gave up. So that had an impact on the pound. If we look to, let me just grab my other list here. I'll use this list here. Sorry, I'm just going to talk about Forex for a second, just a second. Now let's look at the pound versus the US dollar on the daily chart. You can see the pound got hammered. The pound got pounded. This really violent drop was when that new prime minister came in and suggested all these crazy things, and then resigned. And then as soon as she resigned, it picked back up again. So very crazy, very strange time for the pound. Now the euro going through its crisis too, right? It's had a very rough 2022, but there seems to be some kind of bounce happening. So it's recovering somewhat, the euro. Now, how is the pound looking for recovery? Yeah, the pound too, coming off that prime minister resigning and someone else coming in. I haven't really been following British politics, but now the yen is a similar story. The yen has picked up a bit. And I think these combining factors of those big three economies there, I mean, I know Canada and Australia are also part of it, but it's mainly the euro, the pound, and the yen that, give the dollar index its reading. So you can see it's like an inverse relationship here. The dollar has been on a tear in comparison with those other economies. So now we're getting it back under control. And this is good for markets because the stock market and the crypto market are kind of inversely correlated with the DXY. And we can certainly see that has been happening. All right, back to Bitcoin, back to crypto. Let's quickly look 1 second at the stock market, because we know that there's correlation with the stock market, especially the Nasdaq and the S&P 500, or even the Dow Jones. But they seemingly have pulled in. If we go to the daily chart for the S&P 500, we're dealing with a possible inverse head and shoulders here. So we're getting a macro. So we've had a macro low here, a lower low, and now we're getting this higher low, which is interesting, right? Now we've had a series of highs. So there's the all-time high, lower high macro, lower high, and we're currently at a lower high again, except we've changed the structure on the downside. But to truly break this downtrend, we have to break out of this resistance, this long-term descending resistance, and get above that point to change the character of the market to an uptrend. Because we're not quite there yet. It's still a downtrend. It's still, remember that a downtrend is defined by the highs, just as an uptrend is defined by its lows being higher, right? So as soon as you break that combination, which happened over here, as soon as you break that, so this was like the last kind of big low before the all-time high, which was, even higher. You could technically say this was, but anyway, the point is, once that, let me step forward one step. Once that level, which was this low, was broken, price broke below it, that changed the character. It changed the trend from an uptrend to a downtrend, as we define it by market structure, right? So now that we've figured out that the uptrend ended and that we got a downtrend, we now pay attention to the highs. So not this high, not that high, not this one. This one looked interesting because we had a high, then we broke above it, but it was rejected by this trend line here. So not only is there market structure, but there's trends that you need to follow too and be aware of. So that failed. That was a no deal. Then we have this high. Then we have this double top. We seem to sort of double top at this level. So I think, for me, the way I see it, I think this price here, so 4,150 or 4,100, let's call it. It's more like 4,150, I would say, would be the price to beat. We need to get up above that before we can say that the trend has reversed on the S&P 500. So still a bit of work to go. We're at a very critical moment with the S&P 500. It's at the knocking on the door of this trend line. I think that's going to be significant enough if we can break it to come up and at least test those previous highs that we've been pulling in. So far, this was a really good indication that things are starting to change. The fact that we had a reversal pattern on the chart. So that reversal pattern being an inverse head and shoulders. So downtrend, left shoulder, continuation of the downtrend to the head, and then a change in the downtrend, like a change of the lows at least. But just remember, it's not the lows that define a downtrend. This is just this is a moment to sort of, it's kind of like the canary in the coal mine, if you will. Once you see this little signal that you're getting a higher low, it's like, pay attention, because we might be breaking the neckline of this head and shoulder, this inverse head and shoulders, and we might, change the trend to an uptrend. Fingers crossed that's how it plays out, but we'll have to see. We'll have to wait and see. Now, obviously on this was the COVID-19 breakout. It caused a massive drop in the S&P 500 and pretty much every market worldwide. even Forex. I think everything dropped. Very crazy. So when was the last recession? Let's have a look. Unfortunately, this chart only goes back to 2015. I wanted to see if I could find, maybe if I go to the SPY, this chart might have some more history on it. Yeah, so 2008 was the GFC, which is over here. This is the last like pretty hefty recession that we had. And you can see the pattern that happened that reversed that recession, and it was this. See that? Inverse head and shoulders, right? Now, we had a resistant trend line as well. Something to this effect. There was a brief moment we popped out of it, like a bit of a fake out. But no, we got rejected, came back underneath, found it as resistance again here. So I think that's the line, due to the amount of touches, like significant touches there are. So you've got, you know, let me change this. 1, 2, 3, almost 4. A lot of activity. It's very sticky here. Couldn't quite break it. 5. Going back down. And then it did get rejected initially, but then it dipped and found support because of remember the inverse head and shoulders uptrend, the optimism. And then finally broke out the top, found support on top of it, and then continued to rally away. So that was a confirmed break of trend. So you can see that the inverse head and shoulders was the early sign that things might be changing. You know, there might be change on the cards, which is kind of what we've got now with the S&P, right? That's what we got all this time later. We've got this inverse head and shoulders playing out. So fingers crossed, you know, hopefully we can get inflation under control, because that'll give markets the green light to move higher again, to get back on track. So there is no evidence of a drop happening in the S&P 500, certainly not down to this level, I don't think. I mean, I shouldn't say certainly, I should say unlikely. I don't see, you know, I don't even see a lower low at this point. I think just the trajectory that the inflation is coming down on, and the fact that the Fed is suggesting that, you know, they're going to slow down on the increases. They're just going to, you know, hold it for this year. I think that speaks volumes to what's coming this year. I think it will be a year of rebuilding. That's my optimistic take on it. I see less evidence for further downside, but hey, I'll humbly be proven wrong if we do start to head down. If something happens that's unforeseen, like, you know, if war breaks out, or God forbid, you know. But yeah, without any black swans, we are on a trajectory of recovery. So no doubt about it. No doubt about it. And that is reflected in crypto. You can see not only is the S&P heading up, but so is Bitcoin and crypto. So we're kind of like on the edge of our seats here. We're just waiting at the gates. You know, we're at the gate waiting to board the plane for departure. But will the plane take off, or will they cancel the flight? Are they going to cancel the flight? Are we going to head back down? Very possible, right? By the way, if we do pull back, that is quite healthy. It's normal to have a retracement to just test what support we're going to be dealing with. Now, if I draw a fib from all the way down here, all the way to the top here, there are some levels. Depending on where you actually pull the fib from, you might want to pull it down from here, but I would say it's more from here, because this, I think, all of that activity last year has sort of, I don't think it correlates with this push, this move here. But anyway, either way you do want to do it, like, you know, try both and just see where these targets lie. Now remember, Bitcoin likes to bounce if it's going to stay bullish at the 0.5 fib or the 0.618 fib. If it's an extremely bullish bounce, it'll bounce up at the 236 or the 382. You know, so, and that's even if it does retrace, right? So if it doesn't retrace, you know, it could just be consolidating here, like coiling up, ready to explode through this current resistance level. So, like I said, like the title of this video says, it's a big week ahead for Bitcoin and crypto as a whole, right? Now, I think if I go back to my Bitcoin chart here, I have to move my yardstick. We've got a new high just above the previous high. Bit of a swing failure pattern, liquidity grab. But we seem to be overall maintaining this uptrend. Let's see. So, you know, however you want to cut it, there is some trend line coming up here that's supporting price and keeping it bullish, right? There's probably some other sub channels, like some other like lines, like trend lines to be drawn too. You can draw all sorts of lines. You can get like the spider line thing going. But yeah, like for the most part, you can see it's just like, it's sort of like a zone of support. And then in the most recent price history, like over the weekend, we've had this kind of zone of support like that. So it has, which basically suggests a change in momentum. So we know that the first move was huge momentum up. And then over the weekend, which is quite typical, we've had a slowing down of momentum. So a drop off in volume and volatility as well, which is typical, you know, textbook consolidation, right? Consolidation. So what does that mean? That means we might be in some kind of bullish continuation pattern, or if we are going to pull back, maybe this is what we're dealing with. And that is a rising wedge, which is bearish. So not bearish in the fact that it's going to kill the trend, but bearish in the fact that it might cause a downshift for us to come and test maybe 20k, maybe even 19k if we lose this rising structure. So depending how you cut it, I mean, some people are calling this an ascending triangle. So, you know, with resistance set up around here, with, you know, a few swing failures and fake outs of the triangle, the ascending triangle, which is still, it's kind of 50-50 if it's drawn that way. So we've got, you know, like, you know, fair chance either side of, you know, of a rip or a dip. So yeah, that's pretty much it for Bitcoin, markets, inflation, interest rates, dollar index, stock market. That's like kind of like the macro overview. That's what's on. So with that being said, let's just check some of the altcoins. Now I know that Solana's been doing really well over this weekend. It's maintained, very similar to Bitcoin, it's maintained this kind of like structure, this consolidation, right? It kind of looks like a bit of an ascending triangle itself, or even, you know, you might even say that it's in a pennant, you know, some kind of triangle. But Solana got hammered last year, so this could be in for a really nice recovery back to status quo, you know? But this is what I'm kind of seeing here. If I copy this line down, trail it up here, this is sort of what I'm looking at. So this is the range. You see I've got the upper boundary and the lower boundary of this range. So whatever sort of breaks with a retest of that range, I think that's going to be the trend. So either we're going to get the textbook bullish continuation pattern, just like we've had here. You can see it's been doing it. It's been doing it after each transition from the previous consolidation. It's been moving up out of them. So, you know, can we do it again is the question. Can we do it again? Now that's Solana. Let's look at some other alts as well. Sorry about the noise, everyone. Let's see if you can hear it. I think this mic should be able to cut out most of it. Let me check out Dogecoin. I know that's a fan favorite. Full screen. Okay, it's at least on the hour chart here, it's dealing with some kind of a downtrend, like a resistance here, sloping resistance, angled. But it seems to be trying to establish support like that. So it's some kind of descending triangle. Bit different to how like Solana and Bitcoin are looking. Interesting. So it hasn't quite yet broken structure to the downside, kind of going flat. But on the higher time frames, like on the daily, you know, you can see it's just all uptrend so far on the daily. The 4 hour, just a brief pullback, right? It's like a, you know, what would be interesting is if you take this to the bodies of the candle, there, something like just the bodies like this, you've got a bit of a falling wedge, which is bullish. That's just to the bodies, right? Excluding wicks. But yeah, there is kind of like a falling wedge vibe to this move. So if Bitcoin has a solid week next week, I think you'll see a lot of the alts pop up too. Maybe not immediately, maybe after the fact. I think Bitcoin moves first, generally speaking. But yeah, that's Dogecoin. I'm sort of optimistic about it. Remember, these patterns aren't guarantees. They're just trying to get an understanding of probability. Like, you know, what's the most likely scenario. Unfortunately, there are no guarantees with markets. It's, you know, technical analysis only. It's definitely limited. But anyway, let me catch up with the chat here. Sorry, I've kind of like been very busy talking about everything else so far, catching everyone up, because I've been off for a couple of days, haven't streamed. But we're 15 minutes into the new daily candle. Let's keep an eye on Bitcoin while that happens. Let's go down to the 5-minute chart. So there's our 2023 high, the orange line, and we'll just follow that while I read out some comments. All right, OShift88. Good evening to you, sir. Mega Farquad. Farquad. Thumbs up to you too. What's up, DC Woodworking? Chart is looking good. Yeah, I agree. Let's Mars. I had so much ACH, but sold it all because, you know, it's been a rough year. Fair enough. You know, things happen. Shadow 777. Hello. So Ape, how you doing? Good to see you too. What's up, Jack? Forex Dip City. Yeah, exactly. It dipped and then it bounced. It propped back up again, which is cool. What's up, Honest? Peace. Moves on the new daily candle. Cool. How did the daily close out for Bitcoin yesterday? strong. It's a bullish engulfing. Just well, yeah, it's still engulfing. We're off to a good start for the day. So far, we're up 0.33%. We're only 17 minutes into this day. Jeremiah Seeley. Yeah, Mars, it's been a good day for ACH and AMP. Luckily, I bought some more recently, so it was good. So it was a good morning. Awesome. So I thought I had coins at the time. I thought it had 10x today. AJBW looks like rising wedge on BTC, but total market cap more of an ascending triangle for sure. Yeah, interesting. Yeah, I can sort of get on board with that ascending triangle. I mean that rising wedge, right? It could happen. You know, we may not get that big break that we're all hoping for, or at least the bulls are hoping for. MSJS, you think we can still go to 12K? I highly doubt it. I think 14K is a little bit more realistic. 12K, I don't like. I want to see the rationale for that price. Like, why would it go there? I haven't heard any good reasons to why Bitcoin would go to 12K. But you know, like the reasons are outlandish. It's like, oh, the world's gonna burn, or like war's gonna break out. We're gonna go World War III, or we're gonna have a massive recession and depression. Where's the evidence of that? That's what I want to know. Like those, you can say anything. You can say aliens are going to invade, and we're going to go to 10K or 12K or 8K. Like I want to know like what's actually going to cause that, you know. And so that's why I see more upside potential than downside at this point in time, thanks to, you know, what's happening with inflation and the Fed. Because inflation and the Fed are what put us in this bear market. That's why we're down here. The whole reason. There's no other reason for the fact that, you know, we got massively hammered from the fallout of COVID, right? COVID ruined the global economy for a good, you know, 24 months there. So we are recovering off the back of that. These are signs that we are starting that recovery. So I think there's more of a case. There's more of a bullish case at the moment. So yeah, but hey, if anyone thinks that there's more of a case for a downside, then bring it. Like, I want to hear it. I want to hear about it. I want to hear these like big reasons to why we're going to 12K. But anyway, end of rant. Wimpy, how you doing, man? Scallops are delicious. Yes, I agree. I'm wondering if you mean scalps, like when you're scalping on the 1 minute time frame or something. Scallops. Yeah, I think it would take a serious black swan event. You know, for crypto, one of the biggest threats at the moment, or was DCG, Gemini, Genesis, what is it, Silvergate Bank, which is the bank that provides the onboarding and offboarding of cash for those institutions. They recently got bailed out. You know what happened in 2008 with the bank bailouts in the US? Something happened where Silvergate got bailed out of their sticky situation. So that is optimistic. You know, regardless of whether you think that's right or wrong, like it's Silvergate staying afloat is only a good thing for the market, the crypto market, right? Let me look up the article for you where I found that information. I think it was Cointelegraph. Okay. If not Cointelegraph, it was the other one. CoinDesk, maybe? Alright, let me try CoinDesk. I mean, it's a big deal. It's a pretty big story, right? I shared it somewhere. Let me just search. Oh, I know where I searched it. I know where I shared it, I mean. I found it. Okay, here we go. President Herbert Hoover saves the day for a crypto bank? Yeah, that's weird. Okay. Silvergate got propped up by the Federal Home Loan Bank System created in 1932. So something is rescuing it right now. Feel free to read through this article. There is some opinion in it, so it's not like a totally, it's a bit of an opinion piece, but there is pieces of fact in there too, which is important. But obviously the author of the article is going to give their spin on it to make it readable. But yeah, Silvergate used something meant for housing as a lifeline. Anyway, give it a read. I'm not going to go through it now. There's a lot there, a lot of content, but it's definitely worth having a look at. If you're interested in what the hell's going on with Silvergate. All right. They also, by the way, they were also the on-ramp and the off-ramp for FTX, which is kind of scary. But, they are the on and off ramp for a lot of big crypto institutions. I dare say. I reckon probably Gemini, Genesis, DCG, it wouldn't surprise me if they were also servicing them as well. So anyway, enough about Silvergate. Let me carry on here. Let's Mars. Yeah, a big black swan event that would crash everything would be Tether collapsing. By the way, people, the community has been threatening Tether, like the concrete nature of Tether has been criticized and critical. Like everyone's been critical on it since it existed, right? It's been scrutinized its whole existence. So this is nothing new. Every bear market, you're going to hear the FUD about Tether. Oh yeah, Tether's going to blow up. Tether, it's this time. It's going to be this time. Yeah, Tether, this, Tether, that. That hasn't happened. It's never even, there's been some moments where the peg hasn't been perfect, dollar for dollar, but yeah, I don't know. It's kind of scary. It's in the back of my mind as a potential threat to crypto if Tether goes down, but and that is why we have these other stable coins that are coming out just as a backdoor, like a backup plan if Tether does collapse. But man, Tether's huge. Tether is the biggest stable coin. So I'm not on the camp of I'm not praying for its demise, put it that way. If I want crypto to be healthy and I want it to move and be a useful market, Tether is a part of that market. Tether is the part of the reason we're trading crypto and making money from crypto, right? So, I don't think anyone should be sort of wishing for its failure or hoping for its failure. The FUDsters loved to cause a stir with it. Oh, the world's coming to an end. I called it, I don't know what they get out of it, but anyway. FUD's FUD. It's nothing new. You wait, next bear cycle that we have, once, whenever it may be, it might be 6 years from now, it might be 3 years from now, who knows? 4 years, you're gonna see the same things come up again. There's gonna be FUD around exchanges, there's gonna be FUD around altcoins, NFTs, everything. Everything gets scrutinized heavily in a bear market. Everyone's questioning its use case, its everything. In a bear market, in a bull market, complete opposite. Everyone's singing their praises. The mainstream media is telling you to buy at the all-time high. Jim Cramer's saying buy. Yeah, it's inverse. The message you get out there is do the opposite, basically, essentially. If people are fudding, it's just, yeah. Anyway, enough about that. Are you able to give TA on Matic? Yeah, no worries. So, chopper chops. Let's have a look at Matic. Matic. Oh, Matic is healthy. Look at that. It's above $1 again. Matic is a star performer in the in the current state of the market for crypto. Matic, I am so bullish on Matic as a performer in the next bull cycle, the next bull market, right? You watch Matic, keep your eye on Matic. It's a June low. Look, we've maintained highs. We've maintained higher lows. FTX did stuff all to Matic. You know, it caused Matic to come back down to like these levels, the FTX drop, but you know, a lot of other things made new lows thanks to FTX, whereas Matic, it stayed up. It stayed up pretty high. It's actually pretty strong. You feel like Matic is too high to buy? It may be. I mean, getting it below $1 would be nice. But yeah, look at the potential. If we zoom out, it's not even that far from its all-time high, to be honest. At least for on this chart. Let's just do a retracement of price here. The lowest it got was, okay, it took an 89% hit, but it's now back to the 64% level of all-time high. Down, right? 64% down since all-time high. Bitcoin, on the other hand, I'd have to go to the weekly for that. All-time high up here. The lowest point was, what, 77, almost 78% to the bottom. We'll call it 77.5. But now it's back to the 68% level, 68.5. So it's turned some kind of a corner, which is cool. We want to see that. It's still in the neighborhood of these highs, so something's telling me that the bulls are still holding this level. They're defending this level. You know, if anything, we're getting higher lows, right? There's a low. There's the next low. There's the next low. Wick through the lows to grab liquidity, to freak people out maybe, and then we seem to be like getting another low just here. So just ever so gradually, we're inching our way up, testing that EMA that we were talking about at the start of the stream, right? The SMA, the EMA, sorry, the EMA, this one. Let's go to the daily chart and have a look at that EMA. So remember, MA in yellow, EMA in pink. So we've definitely got above that simple moving average, and now we're fighting to hold above the EMA. Technically, we're above it right now as we speak, right? Just. But you can see there's a lot of activity around that. Anyway, get some chickens, super easy to raise. Hell yeah. Honest AF. Yeah, smash up the like button, guys. We've got, what, 33 people in here? That's a high. That's a good day. We've been doing well. $5.99 for 18 here, Canadian. Yeah, that pretty much catches us up. Catches us up to where we are right now. Dealing with the 200 EMA. Now, by no means do I think we're just going to explode up. It may happen, but I think a healthier case, and what I would like to see is a back test of some of these levels before moving higher. You know, I think it's healthier to do it that way rather than to do a DXY style pump like this. It may happen. It's happened before. So anyway, either way, healthy volatility is what makes trading profitable, right? So I'm just glad that the show is back on the road for crypto at this stage. as far as trading is, like, good trading is concerned. You can trade it in any situation, but yeah, we've been starving for this kind of market movement for so long now. Anyway, I'm gonna pretty much wrap it up there, guys. Thanks for tuning in, and all the best with your trading and investing. Stay safe and make money. And I'll catch you this time tomorrow, probably, for actually the stock market opens Tuesday morning, so that'll be cool. So it's the day. I think Monday was Martin Luther King public holiday, so yeah, no Monday trading. But yeah. Anyway, see you later. Have a good day. Have a good night.